What is up, everybody? Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date and informed on what is going on in the crypto space and what it is. Like, did you see Bitcoin's price right now? We just started shooting up. Like, we are just under 94,000, but we did hit that. If we can go even lower right there, can we see it? I know it's on Twitter, so I'm posted, but we were at $94,000 again. So Bitcoin's making its move. There's a lot of stuff going on today and this week, and let's go over the news to hear what's causing this. So first up, we got two major crypto meetings happening this week. We got Democrats and Republicans meeting to discuss the crypto market structure bill. That's happening today. And then on Thursday, we got senators meet CEOs of Citibank, Bank of America, and Wells Fargo to discuss crypto legislations. And Citi, BFA, Wells Fargo, that's a lot of names on this list that Michael Saylor just announced that he got approached by all the major banks recently to launch Bitcoin products and services. Banks are here, and yep, that means Citi, JP Morgan, Wells Fargo, BNY Mellon, Charles Schwab, all of them. Banks are here. But let's hear what Michael Saylor had to say in this quick 47 take of him at Bitcoin MENA happening right now.
Inflection point is all of the large banks in the United States have gone from not banking Bitcoin 12 months ago to, in the past 6 months, I have noted and been approached by BNY Mellon, by Wells Fargo, by Bank of America, by Charles Schwab, by JP Morgan, by Citi. They are all starting to issue credit against either Bitcoin or against Bitcoin derivatives like IBIT. And so there's a sea change here. Wells Fargo and Citi have both publicly announced intent to allow the custody of Bitcoin within the banks. In the year 2026, they'll start to extend credit. Major inflection point is all.
So there we have it. Banks are in. It's happening now. So we could be experiencing some shorter or just smaller dips happening now. Like, that's one of our articles I have. Like, Binance just got a new co-CEO. What's her name? Young-hee Lee, and she is saying about Bitcoin. It's yeah, we're going to stop seeing these sharp declines. So we're going to cover an article to talk about that. But yeah, banks are in. And speaking of banks, looks like $400 billion PNC private bank partners with Coinbase to launch its Bitcoin trading, the first major U.S. bank to market with such an offering. So this is where we're going to start off with news articles. So let's hear about the banks that's getting in on board. So PNC becomes the first major U.S. bank to enable in-app Bitcoin trading. So let me clear out that ad. Hate ads. But traditional banking finally crossed a line many thought would take years. One of the United States' biggest financial institutions has begun letting its own clients trade Bitcoin from inside their bank accounts. Now, PNC Bank is a heavyweight with roughly $500 billion in assets. It has quietly become the first major U.S. bank to embed Bitcoin access into its private banking services, instead of pushing clients toward external exchanges. Now, the lender will let select customers handle Bitcoin buying, selling, and custody without ever leaving their platform. Now, the mechanism behind it isn't homegrown. It runs on Coinbase's institutional infrastructure, but the delivery belongs to PNC. Now, for the bank, this isn't just a technical experiment, it's an extension of wealth management strategy. Now, why does it matter? Big banks have flirted with blockchain pilots and tokenization demos for years, but they stopped short of letting their clients actually trade crypto within their ecosystem. Now, PNC is the first to break this pattern. Its messaging suggests that this wasn't driven by hype, but by client pressure. Wealthy customers want to hold Bitcoin. They simply just don't want to manage wallets, chase exchanges, or take operational risks themselves. They just want to leave it in their own bank account. Now, PNC's chief executive, William Demchok, framed the decision as a fiduciary responsibility. If customers want exposure to the bank, they should offer a controlled and compliant way to do it. Now, Coinbase is getting the validation too. For Coinbase, the development is just it's just business arms, says the partnership makes a turning point, proof that crypto native infrastructure can slot into the core of the US banking system rather than sitting outside of it. Now, institutional co-CEO Brett Tejpal described PNC's move as a disciplined model for banks that want regulated, scalable crypto access. Now, Brian Armstrong, Coinbase's CEO, celebrated the fact that clients can hold Bitcoin in the same place they manage their portfolios, something unimaginable a few years ago, and that was so true. Now, a test case for the industry. PNC isn't opening the floodgates. Access initially targets affluent and ultra wealthy users. So, yeah, only the ultra wealthy is going to get first ups on it. But the bank has already floated that wider availability and more digital asset features are being planned out if functions smoothly. Now, that means this launch may serve as the pilot for the broader banking trend. Instead of just crypto exchanges trying to become banks, banks may decide to become crypto brokers. And if that happens, PNC's move won't just be remembered as a novelty, it will be seen as a model other institutions rush to copy. So again, banks are all on board. So if it runs smoothly, they're going to try to copy suit. So maybe that's more bullish news for Coinbase because they follow suit. It's like, oh, they use Coinbase. Let's go after them. So Brian Armstrong, you're going to get some workload handed to you. Who knows? But yeah, so big news and stuff happening with this banks institution. That's why, again, like we're feeling like, again, like we're in as we talked yesterday, we're in an elongated bull right now. We took a look at the chart and it's like, yeah, we never hit our peak. So with more institutions and news like this coming on board, yeah, I got nothing to worry about. Like we may experience another dip, who knows? But right now, with Bitcoin's price looking pretty this good right now, I love seeing that chart. It's like the narrative is bullish. So that is our first news article we have for you. Now let's talk about, again, yeah, I was mentioning Yi He, the new appointed co-CEO of Binance. What are her takes on Bitcoin? And again, we mentioned she believes that we're not going to see sharp declines of the past anymore. So here we go. Let's go through this article. So Binance co-CEO Yi He said that Bitcoin is now unlikely to see the sharp declines of the past cycles. So Binance, the world's largest cryptocurrency exchange, recently made a management change and signed the most significant change in its management level in recent years. Binance has appointed a second CEO, co-founder Yi He, to this position. This marks the appointment of co-founder Yi He as a co-CEO alongside current CEO Richard Tang. Now, while this move is considered the biggest leadership reshuffle since Changpeng Zhao left his position as CEO 2 years ago, important Bitcoin announcements came from the new co-CEO Yi He. Now, speaking to Chinese journalist Wu Blockchain, Yi He said that it is now unlikely that Bitcoin will see the sharp declines of past cycles. Binance co-CEO Yi stated that the Bitcoin may not experience the sharp decline seen in previous market cycles as it transitions from a niche asset into a mainstream one, and it is pretty much becoming a mainstream one after we see PNC, all these other banks getting on board with it. So it really is going into the mainstream time. Now, he noted that while some countries are planning to seize and sell Bitcoin, many other countries and pension funds and institutional investors have started investing. So at this point, He argued that this trend indicates that Bitcoin's volatility and downside risk will be lower than in the past. Bitcoin is no longer an asset that moves in a small pool. Bitcoin itself is the most decentralized crypto asset out there. Now, as sovereign wealth funds and institutions include Bitcoin as a core asset, the likelihood of Bitcoin experiencing a rapid price crash is lower than in previous cycles. Now, the Binance co-CEO also added that traditional halving cycle theories will now work differently, making old trading strategies less effective in a market with new participants. Now, Yi emphasized that he did not completely reject the halving cycle theory, but its period operations and skill had changed. He also added that these statements were his personal opinions and should not be considered investment advice. His? Man, I thought that was a girl. That's not a dude. Sorry if I'm being rude, but some typos out there in the article. So she, because at first I was getting confused with the he part, like he, like he said. I thought it was just referring to he, not the masculine he. But no, so that's her own personal opinions on this. And yeah, it's like, again, like we are like halving cycles are going to play a little different, but still have the same function. Like, let's go back to the rainbow chart. I'm really starting to love pulling this up as much as I can now. Like, thanks, Steve Blanca from Nashville. But yeah, it's always fun, like really taking a look at this. So like, if we look at the previous, let's go to the actual charts. So here's what the halving cycle has always been. Halving, supply gets cut in half. We have huge price rings, and we have a massive price downwards. And then going into 2016, we kind of had a long cycle. But this one's actually happening even longer, as you can see. We never had that high peak. So are we even going to get these high peaks anymore as we zoom in? Come on, let me zoom in. Here we go. So are we going to get these high peaks of like 100,000? Are we going to stay between this line level of 190? Are we not going to go beneath it? But again, it's very fun to speculate like where we're heading and how like everything's changing right now. We got the world's changing. It's not just a risk on asset, but this narrative for Bitcoin's going mainstream, and it definitely is affecting the price. But I still think we'll have like movements where we'll see like maybe big like price moves compared to what we're seeing right now. Maybe have like Michael Saylor called it back then, like 30% gains year over year. But when halving times come around, maybe it's 50% gains for that year. Who knows? But like we're just watching this new cycle take place right now. But again, we always got to keep in the back of our mind, like we got to consider both scenarios. This is a new cycle. Everything's different. So we just got to play it safe, keep hobbling. Just Bitcoin's still going to grow over time. Or we're going to have a normal cycle and we still will have a dip where we go beneath previous all-time highs. So going back down to 74,000. But again, you cannot just rule one of the options out, because then if you're just really adamant going like, oh, we're not going to dip, we're going to keep going up, then you missed out on an opportunity. So always just keep in the back of your mind that we still could have a cycle dip correction. We go down. If you're a trader and you're trying to just increase your portfolio, it's like I'm going to be like Ivan on Tech. I'm going to just keep holding 30% of my Bitcoin portfolio, move the rest into a stable coin, because if we do have that market dip, then I want to scoop up more Bitcoin at that time. So again, it's all how your strategy plays out. Like hodling is always just the safest long term. Don't have to worry about these changes going on. But all we do need to know is the Bitcoin times have changed and we're going to keep going up. All right, let's continue with the news. What else do we have for you? And just let me say hello. Rainbow chart. If the network doesn't grow, neither will the price. True. That's true if the network doesn't grow, but luckily it is growing. So, woo. So next up in the news, we have Jack Mallers' 21 Capital debuts on the New York Stock Exchange. Yesterday, we got word of Tether moving $43 million worth of Bitcoin. Was that how much it was? It was just for a treasury hold for them, but now looks like it finally got debuted on the exchange. So 21 Capital launched on the New York Stock Exchange with strong institutional backing and a massive Bitcoin treasury. So institutional-backed Bitcoin native company 21 Capital has launched for public trading on the New York Stock Exchange under the ticker XXI. Now, the Jack Mallers co-founded company has the ambition of becoming the largest publicly traded holder of Bitcoin, and its Tuesday U.S. launch follows the completion of its business combination with Cantor Equity Partners. Now, 21 Capital holds 43,514 Bitcoin, worth roughly $3.9 billion, making it the world's third largest public corporate holder of the asset after Michael Saylor's strategy and Mara Holdings. Now, Bitcoin is honest money, and that's why people choose it, and that's why we built 21 on top of it, Mallers said on Monday, the day his firm began trading. Now, listing on the New York Stock Exchange is about giving Bitcoin the place it deserves in global markets and giving investors the best of Bitcoin, its strengths as a reserve, and the upside of a business built on it. Now, in addition to offering investors exposure to Bitcoin, 21 Capital intends to develop a corporate architecture that supports financial products built with and on Bitcoin, including native lending models and capital market instruments. Now, the company launched in April with early backing from Cantor Fitzgerald, Tether, Bitfinex, and venture capital firm SoftBank. The big name backers such as American financial services giant Cantor provided another institutional endorsement of the asset, which has seen markets and trading dominated by institutions this year. Now, 21 Capital aims to be a major player. Mitchell Eskew, head of Blockware Intelligence, said that this isn't your average DAT, whose primary strategy is just hiring a C-tier Bitcoin influencer with a few thousand followers to bullpost 24/7. The group's backing of XXI are connected with the most powerful institutions in the world. 21 will be a major player not only in Bitcoin, but in the grand arc of financial history, and nobody is bullish enough. Now, Cantor is a Federal Reserve primary dealer led by the sons of the Secretary of Commerce. Tether is the top stablecoin issuer and major U.S. Treasury holder. SoftBank manages $330 billion in assets, and Mallers, founder of Strike, comes from a prominent financial family. On Monday, the company transferred its entire stash of Bitcoin to a new wallet, according to Arkham Intelligence, potentially in preparation for the stock market debut. Now, 21 Capital, more than just a Bitcoin hodler. Alongside its accumulation strategy, the company plans to establish a set of Bitcoin-centric operation businesses aimed at generating recurring revenue and expanding institutional engagement with the asset, according to a recent release. It will focus on educational content and branded media to support Bitcoin literacy, as well as the rollout of Bitcoin-aligned alternatives to legacy financial services offerings, and suggesting that Mullers and co. are building an ecosystem, not just accumulating Bitcoin. So yeah, so like they're starting off, but they could be a pretty good competitor with MicroStrategy, because that's how I'm seeing them as they come on board with the New York Stock Exchange. But yeah, so that did happen today. They're debuted. The ticker is XXI. And let's see, less centralization, the better. Be your own bank. That's the whole thing too. Like when I'm on the stock exchange, you're really not your whole bank. Like the best way to be your own bank and self-sovereign is have your own Bitcoin in your own self-custody wallet. So again, not your keys, not your coins. But yeah, so that's Jack Muller's 21 Capital debuting on New York Stock Exchange. Now let's continue on with some altcoin news. Looks like Polygon is deploying Madurgery hard fork and aims for a 33% throughput boost. So yeah, Polygon, the layer 2 to Ethereum's networks, kind of had to make the upgrade because Ethereum just had a hard fork and upgrade due Fusaka, which was to make cheaper gas fees, faster transaction input, and all that stuff. So the other networks, layer 2s and apps utilizing the Ethereum blockchain, had to do an upgrade, and it looks like they just did. So Polygon's hard fork cuts consensus time to 1 second and supports the Fusaka EIPS and lays the groundwork for stablecoin and real-world assets focused on scaling. Now, blockchain network Polygon has rolled out its latest protocol upgrade, known as the Madurgery hard fork, which aims to achieve a 33% increase in network throughput and reduce block consensus time to just 1 second. Now, Polygon core developer Krishang Shah said on X that the updates include support for 3 Fusaka Ethereum improvement proposals, specifically the EIP 7823, EIP 7825, and EIP 7883. Now, these EIPs, or smart contracts, that's usually a word everyone knows, makes heavy mathematical operations more efficient and secure by limiting the amount of gas they consume. Now, they also prevent single transactions from consuming excessive computing power, helping the network run more smoothly and predictably. Now, the upgrade introduces a new transaction type for Ethereum to Polygon bridge traffic and adds a built-in flexibility feature for futures upgrades. Now, Polygon has previously said that the update makes throughput increases as easy as flipping a few switches. Now we are also decreasing the consensus time to just 1 second, so blocks can be announced in 1 second early if they're ready, instead of waiting the full 2 second Shaw route. So whoa, 2 seconds to 1 second. Oh, that's a huge improvement. It really is. This is like kind of just joking. Like 2 seconds is fast already to do it, but that improvement is like a woo. Now we're down to 1 second. Now, here was the tweet from Krishang. Madurgery hard fork is going live on Polygon today. It includes 3 EIPs from the Fusaka hard fork of Ethereum. Again, it's EIP 7823, EIP 7825, and EIP 7883. Additionally, we are introducing a new transaction type for Ethereum with the Polygon bridge transactions. And we are also decreasing the consensus time to 1 second, so blocks can now be announced in 1 second if ready, instead of waiting at the full 2 seconds. I mean, that person gotta be so impatient to wait 2 seconds. I'm sorry, I'm still laughing at that. But the new update reinforces Polygon for stablecoins and real-world assets. So with Madurgery now live, Polygon aims to reinforce the infrastructure while materially improving its performance. Now, these prerequisites for high frequency and high trust use cases such as real-world assets, tokenization, and stablecoins. Now, Ashwari Gupta, the global head of payments at real-world assets at Polygon Labs, previously forecasted a stablecoin supercycle. Now, Gupta said that there will be a surge of at least 100,000 stablecoins in the next 5 years, he added, and this would not be just about just minting tokens and must have a corresponding utility year behind it. Now, Gupta also advocated for more transparency and accountability in the real-world asset sector, and he previously argued that real-world asset numbers are just meaningless if the assets cannot be audited, settled, or traded. Now, when transparency and accountability are established, real-world assets will reach even greater heights, unlocking trillions in institutional capital, he wrote. Now, the hard fork follows major Heimdall upgrade. The upgrade comes on the heels of a rapid prior improvements on July 10th. Polygon deployed the Heimdall 2.0, dubbed by the Polygon Foundation CEO Sandeep Nawal as the network's most technical complex hard fork since its launch. And the update reduced transactions finality times from 1 to 2 minutes to about 5 seconds. However, on September 10th, the network experienced a significant disruption when a bug caused finality delays of 10 to 15 minutes, affecting validator sync, remote procedure call services, and third-party tooling. Now, despite this, the team assured the community that blocks were still running, and on September 11th, the Polygon Foundation announced that the consensus and finality functions had been restored through a hard fork with the update of the nodes, and there was no longer stuck at all, while checkpoints and milestones were finalized as expected. So yeah, so that's Polygon just doing an upgrade. They just had a later one, which that was actually seems a lot bigger, going from what 5 minutes to the Heimdall 2.0. Like it fixed a hard, what was it, 2 minutes to just 5 seconds. So that was a pretty big upgrade. But it looks like they just had to make this next one because of the Fusaka upgrade. And again, it's all because they're a layer 2 on Ethereum. In order to run smoothly and just not just stall behind, they had to make this upgrade. But again, how many people are actually still building on Polygon? Like it was really big last cycle, 2021. 2020, 2021, it was the news. Layer 2s were pretty big at time, cheaper fees because everyone's making NFTs at the time. But I haven't really been hearing much action going on with Polygon, so I'm not sure how they're going to fare if altcoins ever have a run again. Like, they're still around, but who knows? Maybe it just might not do as good as we would hope for. But that's my thoughts on Polygon, but kudos on the upgrade. Now let's talk about Tether invests in Italian robotics startup, the generated bionic amid humanoid hype. So Tether, the highest top stablecoin out there, is starting to invest in robotics, which is going to be a big narrative and just our next step in human technology evolution out there. Again, I think I pulled a chart one time showing, we had fire, we had electricity, we had steam engine, car, banks, phones, internet. It's just like we just been going super fast, and robotics is on that timeline for just all the new technologies we're getting. But stablecoin issuer Tether has joined an 81 million round as a humanoid robotics draw increases investors' interest. So Tether has entered the humanoid robotics race. The company said on Monday it invested in generative bionics as part of a $70 million or euro, pound, I think that was euro, as I say, an $81 million round, joining a sector dominated by firms like Tesla and Nvidia. Tether said its funding will help the startup complete industrial testing and build its first production facility ahead of planning deployment in 2026. Now, Generative Bionics describes its machines are as physical AI systems designed to fuse humanoid robotics with artificial intelligence. Now, Tether invests in technologies that strengthen global digital and physical infrastructure and expand human potential. Tether CEO Paulo Arduano said in a statement that humanoid robotics and physical AI represents a powerful evolution in how intelligence and capability operate in the real world. Now, for Tether, the investment continues a pattern of funding hardware and infrastructure projects beyond just crypto, including artificial intelligence, media, and agriculture, and brain-computer interface technology that just sits outside of the core stablecoin business. So yeah, Tether is more than just stablecoin investing now, and not just being fully one backed by Bitcoin. Like that's like, did they start off like that? No, they started off more with a mix. They had backing of Bitcoin, US dollars. Now they got treasuries on their investment. Now they're getting into robotics. They were into artificial intelligence, media, agriculture. So Tether has really expanded their backing, just being more than just a stablecoin. But other firms are joining Tether in the Generative Bionics fundraiser, including the Artificial Intelligence Fund of CDP Venture Capital, which led the round, as well as AMD Ventures, DeFruco, ENI and RoboIT. Now, launched in 2024, Generative Bionics spun out of the Italian Institute of Technology, where researchers built more than 60 humanoid prototypes over 2 decades. According to the company, 70 of the Italian Institute of Technology engineers joined the company and are working to turn that research into commercial robots for manufacturing, logistics, healthcare, and retail environments, bringing the label Made in Italy to the humanoid robo market. Now, Generative Bionics also said it plans to debut its first complete humanoid robot at CES 2026 in Las Vegas. Now, our mission is to build a future where intelligent humanoid robots collaborate daily with people, amplifying human cognitive and physical potential. Generative Bionics CEO and co-founder Daniel Pucci said in a statement, "Now, our physical AI enables us to design and manufacture human-inspired robots that create tangible value across multiple applications." Now, who else is betting big on robots? Humanoid robotics drew heavy investment in 2025. In February, Figure AI raised $67.5 million at a valuation of $2.6 billion. Now, that was followed by Bedrock Robotics in July, which secured $80 million. And then in April, Roundhill Investments filed for a humanoid robotics ETF, reflecting growing confidence that humanoid systems could ease labor shortages and support operations in industry settings. Now, Morgan Stanley has projected the market could reach $5 trillion by 2050, led by demand in logistics and manufacturing. And that totally makes sense. Robotics by 2025, who knows where we're going to be? Just like how fast like technology is evolving. Like robotics cannot have come as far as they could without AI. And now like AI is improving themselves on their own, and now they're going to improve robotics as well. So yeah, so things are going to get pretty crazy in robotics. Like just again, I was just in California and I saw it already happening. Tesla restaurant, saw the robots they got there. You got robot delivery drivers, just little cartridges, like just driving around delivering food. We got automated taxis, the Waymo taxi cars, like they were everywhere. So it's like they're just going to get better and better, and they're also going to start throwing in some humanoid aspects to it. So instead of just being a little box with wheels on it, it's going to probably start being more like the Tesla robots. It's very human-like. So it's getting scary, it's getting interesting, but it's also getting exciting. So, woo, it's pretty cool on Tether's investment in robotics, just getting in there. Now let's move on to our final articles. Yeah, really our final articles. I just got one more for you guys. We started off late today. I gotta get ready for our next class. But yeah, just one article I'm going to skip through. Binance confirms employees suspended amid ongoing insider information investigation. Who even was it? There was an employee misconduct on December 7th, 2025. Binance's internal audit department received a report alleging that Binance employee had used insider information to post on official social media and improperly obtained personal gain, and immediately launched in blah, 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 something. So yeah, so someone was doing some kind of insider trading, just getting some insight tips, boosting the narrative, and just, yeah, so they're investigating that right now. I'm not going to cover the whole article just to save on time, but speaking on like that side of the aspect too, of just like mail fraud, bad actors out there, looks like ChatGPT has helped expose a $1 million crypto pig butchering scam. So this one I do want to share with you because I'm always interested when people finally come to clarity and go, oh, like I was a part of a scam. But yeah, so an online romance led a Bay Area woman to drain her retirement accounts, only for an AI assistant to later warn her it was a scam. So ChatGPT came in and just like she typed in going, this doesn't feel right. What do you feel about this investment? And ChatGPT said, oh, this is most likely a scam. And this led the lady to discover that. So let's hear her story about what exactly took place. So a San Jose widow who believed she had found a new romantic partner online instead lost nearly $1 million in a crypto pig butchering scam, and only realized it after asking ChatGPT if the investment offer made any sense. Now, the scheme drained her retirement accounts and left her at risk of losing her home, according to a report by San Jose-based ABC7 News. Now, the woman, Margaret Loke, met a man who called himself Ed on Facebook last May. The relationship moved quickly to WhatsApp, where the man, claiming to be a wealthy businessman, sent affectionate messages each day and encouraged her to confide in him. Now, as the online relationship deepened, the daily check-ins never stopped. He was really nice to me, greeted me every morning. Luke told ABC7 News. He sends me every day the message, good morning. He says he likes me. The conversation soon turned to crypto investing, Loki said. She said that she had no trading experience, but Ed guided her through the wiring funds into an online account that he controlled. And according to Loki, Ed showed her an app screenshot that showed her making a big profit in seconds, a tactic common in pig butchering schemes that use fabricated results to convince victims their money is growing. And it happens all the time, and this is just how it starts. Again, they get you on the emotional side, like she's a widow, she thought she met someone online, starts off nice, I made good morning text, makes her feel good, and then it leads into crypto investing, screenshots, fake photos of fake profits, and it's a tell as old as time. It's always happening. But pig butchering scams are long-form cons in which fraudsters build a relationship with a victim over weeks or months before steering them into the fake investment platform and then draining their savings. So in August, Meta said it had removed over 6.8 million WhatsApp accounts linked to pig butchering scams. As the scam progressed, Loki said she sent a series of escalating transfers, starting with $15,000, which grew to over $490,000 from her IRA. She eventually took out $300,000 second mortgage and wired those funds as well. Altogether, she sent close to $1 million to accounts controlled by the scammers. Now, a scam exposed by an unlucky ally. So when her supposed crypto account suddenly froze, Ed demanded an additional $1 million to release the funds. Panicked, Loki described the situation to ChatGPT, and ChatGPT told me, "No, this is a scam. You better go to the police station now," she told ABC7. Now, the AI respondent that set up matched known scam patterns, prompting her to confront the man she believed she was dating and then contact the police. Investigators later confirmed she had been routing money to a bank in Malaysia where it has been withdrawn by scammers. Now, she said, "Why am I so stupid? I let him scam me," Loki said. "I was really, really depressed." Loki's case is the latest example of ChatGPT being used to bust scammers. Last week, an IT professional in Delhi said he vibe coded a website that allowed him to determine the location of a photo of a would-be a scammer. Now, OpenAI did not immediately respond to Decoder's request for comment on this, but this is a growing cybercrime trend. According to the FBI's Internet Crime Complaint Center, $9.3 billion was lost to online scams targeting American senior citizens in 2024. Many of these scams originate from Europe or compounds in Southeast Asia, where large groups of scammers target international victims. In September, the U.S. Treasury sanctioned 19 entities across Burma and Cambodia that it says scammed Americans. Now, Southeast Asia's cyber scam industry not only threatens the well-being and financial security of Americans, but it also subjects thousands of people to modern slavery, said John K. Hurley, under the Secretary of Treasury for Terrorism and Financial Intelligence, said in a statement. Now, the U.S. Federal Trade Commission and the Securities and Exchange Commission warned that unsolicited crypto coaching that begins inside an online relationship is a hallmark of relationship scams. Long game frauds in which a scammer builds emotional trust before steering the victim into fake investments. Now, Loki's case followed the pattern with escalating pressure to deposit more and more money, and federal regulators warn that recovering funds from overseas pig butchering operations is exceedingly rare. Once the money leaves the U.S. banking channels, it's leaving the victim like Loki with very few avenues for restitution. So just be careful, guys, out there, like for those of you in the older generation, because again, this usually falls victims to older senior citizens or just in that ballpark range where they're falling for these online scams, not just because it's not the person's dumb, naive, gullible. It's just I always say that people skip out on the technology boom section. Like I always go with that timeline. Like I almost skipped out on the Apple Watch. So like I was like never wearing one of these, but like this becomes so useful with just like notes and taking. It's like you don't want to miss technology. And most of these people probably missed out on the computer boom. Let me set up my email. Let me use some social medias. Like they skipped that entirely because they didn't need it at the time they had it. So it's not like it's not like the person's dumb or anything. It's just they didn't have the technical skills to be really fully aware that these scams do exist, and this is how they play out. You can't trust everyone online, especially when it comes to the romance side of it all. Once they lead you to an investment, walk away. Once they ask you for a little money, hey, want to pay for my coffee? Walk away. Anytime there's any money with this, and even if it's on WhatsApp or Telegram, walk away. Those are where the scammers thrive. So guys, just be very, very careful out there. But that is it for all the news I have for you today. Thank you for everyone for tuning in. Let's take a look at our fear and greed index. Where are we at today? We are at a 25. So I didn't know we were going to move up by 1 point because yesterday we were at 24. So yeah, people are still fearful, but we could be going up even higher just because, again, Bitcoin touched $94,000. This may not be the end. Lots of bullish things happening. Again, today, Democrats and Republicans meet to discuss the crypto market structure bill. So that could be pretty bullish. And also, we still got to talk about later this month about a Fed rate cut. So that's bullish news too on the horizon. So everyone keep on stacking, keep hodling, keep your private keys safe. And yeah, if you're a club member for the Bitcoin Ben Crypto Club, I will see you in a few moments for our crypto class today on just decoding the sovereign stack and this life tools beyond banks out there. And if you want more information about our programs we have to offer, confidential bulk purchases, home to hodl, loans for Bitcoin, Beef Initiative, go to bitcoinben.io or give us a call at 941-413-8080. So everyone have an awesome Taco Tuesday. Eat a taco for me. I think I got some wings out there waiting. So everyone have a blessed and awesome day, and I'll see you tomorrow.
What if I told you a truck driver cracked the code to building a crypto empire? Meet Bitcoin Ben. He went from driving 18-wheelers to creating 6 different ways for regular people to stack Bitcoin and build wealth. This isn't just another crypto course. This is a complete ecosystem where you earn while you learn. First up, the confidential bulk purchase program. Get Bitcoin at wholesale prices through group buying power. Then there's home to hodl. Convert your home equity directly into Bitcoin instead of cash. Need funding? The Loans for Bitcoin program gets you the capital to buy more crypto. Want passive income? Private Key Capital puts your Bitcoin to work. Hungry for something different? Bitcoin Ben's tokenized beef lets you invest in real cattle backed by blockchain technology. And if you want to mine? Bitcoin Ben's mining program gets you started with the right equipment and knowledge. But here's the kicker. Bitcoin Ben's Crypto Club pays you to learn. Earn 10% on direct referrals, 5% on second level, 2% on third level. This might be the only membership where you make more than you pay. Ben went from 10 years behind the wheel to becoming the world's most unlikely crypto expert. Now he's sharing everything through live training, community events, and proven systems that work. Ready to stop watching from the sidelines? Join Bitcoin Ben's Crypto Club today and start stacking sats while building your financial future. Your truck driving days are over. Your crypto empire starts now.